What's the market doing now? Is it still risk on or risk off? Corey will be answering that question, as well as we'll dig into Tuesday. I missed our Tuesday. Who got eliminated from the Ankerstar Wealth Fantasy Football competition? Hint, hint, it's a CEO. And then I'm going to talk about jobless claims. So as I get started, this is a financial education presentation. I promise I'll link fantasy football to finance. More disclaimer information can be found on ankerstarwealth.com. The opinions expressed are mine and Corey's alone. So you must do your own due diligence. So here we go. I know, this should have been like breaking news, but I'm going to share my screen. And Steve Ankerstar, who does have a team in both of our leagues, but he has been eliminated from the West. And how did Steve do it? How did our CEO and expert fantasy football person, how did he go down and pass out of our league? Well, he put his eggs in the Dallas basket, and he had CeeDee Lamb, which, there's no problem with CeeDee Lamb, but he also had Dak Prescott. So how do we tie this to stocks? Sometimes you can buy a great stock, say a NVIDIA, but then if you closely correlate and buy a bunch of Intel, Marvell, and other chip stocks, if one of them goes down, they can all go down. It's not just one company, it's a group. And I know we have a lot of listeners in Texas. Dallas went down to Chicago. CeeDee Lamb only played 6 plays. No one would ever question Steve having CeeDee Lamb and starting him, but that also caused Dak Prescott to go down, and the whole ship went on to sink. So sorry, Steve, you are out of the West, third person out. In our Eastern Conference, a good friend of mine named Josh, look at this. He has Dak Prescott as well. Dak Prescott leads 2 teams out of the league. His wasn't quite as bad. In fact, my team and my son's team we barely survived above Josh. I think it even came down to the last few plays. But I'm sorry, Josh, you've been eliminated. So I will not disclose people's last names unless they're employees of the company. So
can I see the leaderboard, Mike?
Oh, which one? On the West? Here, I'll take you back to the West. Go to, let's see, league standings. Yeah. It really doesn't matter what the leaderboard shows. It's what you do this week. So these are the upcoming projections you can see. It just doesn't really matter what you see here except for that week. So anyways.
Wow.
Yeah. So makes you want to get in it, doesn't it, Corey?
Well, I'm in it. I got...
which team are you?
Aren't I team no regrets? No regrets.
Let's click. Let's
analyze. I endorse this team. Yeah, this is where
see,
I'm
that's
at.
The problem.
My chips.
Corey's name's not listed here. He's like anonymously in the league. So.
Well, no, I'm a fan.
Okay, we'll see. Corey's team will go out sooner or later so that I can try to take the whole thing. And keep in mind, there was no entry fee to be in this league, and the prize is. The Ankerstar Wealth Silver Bowl, which of course we will try to award in person to whoever 2 people win this. And, and then of course, glory and bragging rights for at least a year. And I really do enjoy this format. Okay, things that I enjoy. Well, that's kind of good news, bad news. Anytime someone's going jobless and they're filing a jobless claim, I mean, that's kind of bad news. We don't want people to file jobless claims, but I mean, it went down to 218,000. So that's actually technically good news. It's 14,000 less than the previous week and less than, all the experts said it should be, 17,000 more. So that's kind of good news. That says less people are filing for claim or for unemployment, new first-time claims. The other thing is, gross domestic product, GDP. This is how we can afford to grow. And the stock market is very dependent on this. As GDP goes up, the stock market tends to beat that. So anyways, continued up. So these are I consider this kind of good news. This is kind of good news. Not sure the market will react, accordingly, but it's kind of the good news is bad news sometimes. The economy's slowing, no doubt about it, but it's not slowing, crazy. So that means that they don't need to cut the Fed rate. On the bad news side, I always want to keep our fingers on the pulse. Like, what's going on? What's going on with McDonald's? What's going on with Walmart? What's going on with Costco? Starbucks? While, I would consider coffee at Starbucks to be a want, not a need, probably because I don't drink coffee, but a lot of people consider this a need. So when you see Starbucks closing stores and laying off workers, that really says to me the economy is slowing. I mean, I've seen Starbucks, I've taken my daughters through to get their coffees or whatever they want, and there's lines to pay, to me, too much. I mean, Starbucks is practically printing money, in my opinion, but they are laying off 900 non-retail, so that means people not in the store, but they're also closing stores. So, I mean, I would assume those people are probably going to get laid off or at least have to move to another location. But they are closing 1% of their stores. And you might say, well, 1% is not that much. That's more than 100. And there is with businesses, when they open up locations, maybe it's not the economy as much as it's just like not that much business in that area. So, Corey, do you buy yourself Starbucks?
I'll tell you what, I don't. My family does some, but I tried to get some at the airport yesterday. I couldn't even get it because the line was so long. I had to go to some other store that gave me a bad experience at the, in the little food airport space. But yeah, I couldn't even get it yesterday.
And I will give Starbucks kudos that I've always heard their customer service is outstanding. And when I went in, people are very polite, kind of like a Chick-fil-A as well. People are very polite. That goes a long way. I've went in those drive-through lines. They move relatively well. I mean, I don't remember being like, this takes so long. But when I see it at the airport, like Corey's talking, I mean, I see lines of 30 and 40 people deep. I've never stood in that line, but I mean, that's just like, wow, what a business. So, we'll see what Starbucks does from here. They picked up a new CEO, Brian Nicole, last year from Chipotle, and I'm sure he's going to leave a mark. He's coming in, their stock had been lagging, so we'll see what he does with this. So with that, we're seeing some signs the economy's slowing, jobless claims maybe not as bad as we thought. What's the market? What are you hearing, Corey, on? Is it risk on, risk off?
Yeah, real quick, just got one thing today. I know I went a little long yesterday, but it was good stuff. I wanted to show this from the Adaptive Group, specifically just give a shout out to Ian McMillan over there. We really appreciate what they do over there, not only with ADPV, but just with some of the things that they put out. So this is taking some of those boring sectors or parts of the market and comparing them to the S&P 500. So line going up means that this sector is beating the S&P 500. Line going down means the S&P 500 is beating this sector. So you've got real estate there in blue, consumer staples, that's your grocery, food, things like that. In black, low vol versus high beta. So these are your stocks that are slow and steady versus kind of the really risky fast movers out there. And then, of course, in green, you've got the bond aggregate versus the S&P 500. If you look at the right side of this is about a 5-year chart. If you look at the right over there, you can see specifically consumer staples have broken out to an all-time low. So they actually make up the smallest percentage of the index that they've ever made up. All-time lows there. I believe you've got all-time lows in real estate as well. Low vol versus high beta. I think you've gotten to all-time lows there. And then bonds, I don't know if you're at all-time lows on bonds. That'd be a really long chart there. But, you're breaking down at least to relative lows here in these last 5 years. Now, I do want to, it's like, oh my gosh, who would own any of these things? Well, let's go to the beginning of this chart. So you're looking at about April of 2021. So, we'll call it 5-ish years ago. If you fast forward, look at that black line, from about April of 2021 out to July of 2023, you were outperforming there with staples compared to the S&P 500. Now, what happened at the end of 2022? Obviously, you got ChatGPT released, and the rest is history on the AI trade and the boom that happened in the stock market as a result. So staples have obviously fallen off significantly from that point. But, if you go to like the beginning of 2022 to the end of 2023, you had about 25 percentage points of outperformance there from staples. So there is a time and place for all of these things. Obviously, right now is not the time and place. The market is telling us as much. Now, I wanted to mention one more thing, Mike. What does this signal? This signals that, do investors want safety? Do they want slow and steady?
Not right now.
Do they want low volatility? No.
I think they do want it, but they want good returns.
No. The price action is telling us they don't want any such thing. The investors want high beta. They want, large market cap, S&P 500, tech mostly names, and that's just the market we're in. So I wanted to show this because Ian's pointing out here, these things are still breaking down. There's no bottoming process happening in these relationships. These are fresh lows. So investors are as bullish and as risk on as they've been all cycle, as indicated by the price action here. All right, that's all I got.
I think there's one key thing I want to point out on that chart is if you look towards the right side, which would be above April, you see a spike. So that's when the tariffs came out. And I'm sure some people remember this. I mean, the market sold off quite a bit. Well, you see what happens is these, in a portfolio went, well, you can't say that they went up, but they didn't go down as much. So there was a sudden, maybe we're going back to consumer staples, and it almost got back to the S&P 500 there. So
yeah, it's interesting.
So I mean, I see a spike like that. It'll be really interesting. Corey, definitely bookmark this. I want to see this as this goes forward. I think this is a kind of chart that we should look at like once a month or once every couple months on this show, because the next time, because everybody, I want to be higher risk, or I don't want to be in these. Great, okay, but the minute when the market swings, which it will at some point, I want to take a look at this and be like, oh, now maybe you did want to be in some of these. So that's why you want to have a diversified portfolio.
Oh, sure.
So I mean, these, I think it's good to look at. So
Mike, that's a really good point. When you get that drama, like we saw in April, these things can outperform. And that's why I say there's a time and place for it. It's just right now we're not in that time or place.
We are today. And next week, we don't know where we'll be. So
that's right.
All right. Thanks, everybody, for hopping on. All of our fantasy football people that are listening, good luck this weekend. We'll see who gets eliminated next week. And have a good one. Bye.